The cost of President Trump's tax plan rising with every new proposal from Republican lawmakers. Robert Frank is going to tell us why the bond market may be the biggest risk to the president's tax bill.
Good morning, Joe. Well, the potential costs of the new tax bill, they are soaring from about $4 trillion to over $8 trillion. Extending the 2017 tax cuts would cost about $4.5 to $5 trillion, just that piece of it over the next 10 years. You add to that President Trump's new plan, so no tax on Social Security, that's $1.4 trillion. No taxes on overtime pay, that's about $900 billion. No taxes on tips, that could be anywhere from $100 to $500 billion. And then raising the SALT cap from $10,000 to $25,000, that's billions more. You add it all up, that would be about $7 to $8 trillion. And that money not only would raise the debt, but also the interest costs on that debt. So without an offset in cost, the Peterson Institute estimates that the interest on the debt would raise that total to over $9 trillion. Now, to fund all that, the government's going to need to issue more debt, and that more supply of debt could bring higher rates. More debt means bond investors will also demand higher yields to take that added risk. You boil it all down, the CBO estimates that every 1% increase in debt to GDP adds 2 basis points to long-term rates. So debt to GDP expected to rise 34 basis points over the next 10 years as a result of this tax plan. So that would add an implied 68 basis points in higher rates. We've seen these rates blow out over the past 24 hours. Some of that may be China selling. Some of it may be the hedge funds. I think your point earlier is spot on. But I think also as the deficit hawks in the House are losing ground in this battle over reducing the cost of this tax plan, I think bond investors are also clearly paying attention to that.
I mean, that's the opposite of a virtuous cycle.
Yeah, because more debt, higher yields increases the cost of servicing that debt, and then it just starts to spiral. Exactly, that's what people are worried about.
So the thing that you hear President Trump or his acolytes, in terms of talking about the first term, was the 2017 Tax Act. So one of the basic tenets, and we've talked about it before, that if you cut taxes, you're going to get more revenue from growth. That's the whole idea. So if you heard Trump himself say we might let the top rate go back to 39.6?
No, he said it, according to 2 reports now, at a meeting with Republicans. Lindsey Graham said, okay, you say everything's on the table. Would you consider raising rates on high earners? Not the wealthy, but high earners.
That'd be the
important
top
distinction.
Yeah.
And he apparently said, yeah, I'd consider that. I'd consider everything. Remember, in 2016 on the campaign trail, he said, I think we need to raise rates on the high earners. It's time. Remember, he said that. And remember, the 39.6 to 37 that was part of 2017, that only became because there was a big reception at Mar-a-Lago right after they announced SALT was going to be part of the plan. And all his New York friends were at that reception and say, you cannot do this without some kind of offset on top rates. So it was only because Gary Cohn, Larry Kudlow, other people around him said, if you're going to kill people with SALT, especially at the high end, you've got to have an offset. It was at the last minute they did that. I would not be surprised, given how politically popular it is to raise rates on the high earners. Plus, Trump and his friends, they don't pay ordinary income rates.
Right.
It's only chumps who pay ordinary income rates.
They've got all the partnerships.
So they've got the partnerships, they've got real estate appreciation, they've got all this fun stuff.
That's philosophically going against everything that they... That was the reason. The reason we're doing this is because it will generate more and it will cause growth.
Populist impulses are going against what traditional Republicans have done.
Exactly.
But more and more.
Andrew, yes.
I'm curious, we're going to have Elizabeth Warren on the broadcast a little bit later.
Yeah.
What do you think most Democrats think of this program? And not just Elizabeth Warren. Do you think the Democrats across the board would go along with it if there was no change in the SALT program?
I think there's a small faction of Democrats that are going to block anything that doesn't change SALT. Bringing it up to 25,000, I think, will appease most of them. But look, this is, as Becky just mentioned, this is a very populist tax plan. Tips, Social Security, overtime. These are, blue-collar workers. This is not a sort of job creation, job creator-focused tax plan that we are used to hearing from Republicans. No. And I
you
think
get populous enough, you turn into a Democrat. That's what you said. You do.
And remember, Biden's plan was saying we're going to extend all the tax cuts for anyone who earns less than $400,000.
Right.
Effectively, this is a redistribution that Trump is talking about from the top to the bottom. And I think a lot of Democrats would like it. They're not going to vote for it, but they're going to like it.
Well, Robert, and they used to brag, and Trump has bragged repeatedly, everybody got a tax cut. Biggest tax cut in history. Everybody got a tax cut. But you have pointed out that because Willie Sutton, where the money is, a lot of the tax cuts did accrue to, they got, I guess, more because they're paying more. Some people don't pay anything, so it's hard to. But they'd go back on that completely and say, never mind. We didn't mean anything we said about trying to spur growth, and that's how we're going to deal with the deficit.
If you have to deal with I don't even know if you deal with the deficit.
Yeah, but they said it was growth.
But if you pay for the rest of this, you have to go where the money is, too. And this is
But growth was going to be, that's all we have. No way we're tackling the deficit.
You know the top 10% pay vast majority of the tax, more than 3/4 of the taxes. So this will make it even more progressive if they raise the top rate.
But the tariffs are the opposite of that. The tariffs are basically
the tariffs are regressive. It's the most regressive
and hurt the people at the bottom.
They obviously didn't believe the story that they were telling us, that it's going to come back through growth, and the revenue that we're losing from the nominal rate is going to spur business activity, and so they, never mind. We're going to go and do the
Well, again, I think that it could still do that. I mean, tariffs are a whole other issue. But on its own, I don't know that going from 37 to 39.6 will destroy, the corporate rate coming down was good job. The corporate rate coming
95% are small
businesses. Immediate deduction of capital expenditures. Those are the things that really drove growth.
But you knew only 5% of companies are C Corps? Of businesses.
So what you're saying is that small businesses are going to pay that 37 to 39.6.
They will, small and medium, even some large companies aren't C Corp. And they pay at the level.
You're only C Corp if you're issuing stock.
Right. No, pass-throughs, LLCs,
and you got a lot of money for
partnerships. Those are the majority of taxpayers right now.
Robert, we wish you were here all day, every day.
Literally,
this is amazing to have your vast knowledge on these issues. We love having you here.
Thank you. Good to see you.